Good morning. How's it going, everybody? Hope you guys are doing well. Glad you can join me on this Wednesday morning, October 4th. We got NFP coming out on Friday, so we're expecting to see some good volatility in the markets. Specifically, Euro US dollar is the one that I'm watching. So I thought it'd be fitting to do a session today with you guys and take a look at what it is that I am seeing on the charts and try to figure out what exactly is going to take place. All right, so let's take a look. Start by taking a look at the Euro chart. In our school, we did a level 3 session where we detailed exactly what has been transpiring since price was at the highs here. And if you guys have been watching the reports, the CFTC reports that I've been producing and putting up on the YouTube channel, you would know that we've been expecting a drop in the euro for some time now. And that's all been fueled by the banks needing to offload a massive amount of long positions that they had. And so we contacted some significant supply on the chart, and then we saw the banks offload their longs and offload their longs and offload their longs. And each time they offload their longs, they always need to lure in retail traders to be buying, right? Because you can't offload longs without somebody wanting those long positions from you. And the only way you can do that is to trigger retail traders into thinking that the euro is going to go upwards. So we've seen these cycles over and over and over again. And they happened at the highs, they happened down here, they happened over here. Remember this one? We called this move, remember? In a level 1 class that we did, supply and demand class for level 1 students. This move to the upside. This move here. There's another one here. We called this one as well. And now, there's a new one that's just about to take place, as far as I can see it. And it just started. It started today. It was in the process of starting yesterday, so I went long, and it's going to continue today, as far as I can see. So what is that process? Okay, well, let's take a look here at what retail traders are doing with their positions. Let me just take a little screenshot here so I can show you something. Let's open up this here just a little bit, and we're gonna post this in here right there. Okay, very good. So you can see now that I'm going to draw a little arrow that points to exactly right here. And let me maybe just enlarge that a little bit more. So what you can see is that when price was down here, they held 88% of their positions were to the long side. That's retail traders. 88% or 88% of their positions are to the long side. Now, up and around here it got even worse. It was like in the 90s. Okay? I believe in the early 90s I saw. So what took place from there? I mean, it's like the banks. When they reach maximum size, they can't go anymore. There's always a breaking point. There's always a point of retail traders saying, I'm done. I can't keep adding to a long as price is declining, because you have to understand that this long position they were adding as price was declining. Okay? All those martingale strategies and all those strategies that get people to add to a position as it's going against them. Worst thing to do ever. And so they keep adding longs thinking, oh, this is overdone, we're going to get a reversal, and it never happens. And the only time the reversal comes in is when they reach their breaking point and they say we can't do it anymore. So look at that, 88% to now 74%. Okay? And look at shorts, 12% to 26%. So now they're adding shorts down here, thinking, okay, forget about this, it going long. let's just jump on the bandwagon that is going to continue going lower. So they start piling into short positions. This is when they start reversing price to the upside. So I initiated a position down here. Okay, that's what this little thing is here for. It's to mark my position, and I'm expecting a move up to this area here. Now, why that area? Well, after doing some analysis on the charts, this is the latest area where the banks were selling the euro. Okay. Just like if we look back through the history of the chart, I will point out the spots where the banks were selling. Here. 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 Okay? Do you see something? You see something happening here? Consistently rallies into areas of supply that were located on the charts. These are areas where the banks were coming in and selling. They reverse price up to those areas where they were selling, and they continue on with their selling. So it's like a swoop down back into their areas of selling, and then they sell. A swoop down back into their areas of selling, and then they sell. A swoop down back into their areas of selling, and then they sell. A swoop down from an area of selling, then they sell. Swoop down. I believe they're going to rally up into an area of selling, and then they're going to sell. So yesterday I posted what my thoughts were with respect to NFP and what I thought was going to take place. So let's just go and take a look at the economic calendar. We're going to scroll down to Friday. Here we go. Let me just do a screenshot of that and bring it up. Oh, let me fix that so that I get this in play here. There we go. All right. So this is what we have on the economic calendar for Friday. So we have non-farm payrolls. September previous was 187. Consensus is 170,000. So let's just put things into perspective here. Let's just imagine that these numbers are going to be used by the institutions to help facilitate their needs. And what are their needs? Well, let me just open up something here. Let's look at the euro. Okay, this is why it's so important to track their positions here on the spreadsheet week after week after week, because we can see when they reach 264,000, which is near their maximum size. We knew when they reach maximum size they're going to take profits, and that's what they did. Look, we could see the decline: 264, 250, 240, 228. Okay, straight days of decline. Then they increase positions. Why? Well, because they need to lure retail traders into buying, right? So you have to buy to cause the market to move to the upside. They increase it, then they decreased it from 235 down to 207. Recently, we see them increasing again to 211,000. So they still need to offload their positions, as far as I can see. Okay? And we can get a good estimate of what position size they would want to try to bring them down to. I'd say, in the maybe 140s, 150s is what they would naturally want to bring it down to. So we're at 211 now. So it's got room. And if you look at shorts, you can see that they're slowly building on those shorts. Look, July 25th, look how cooled off those positions were. From 73,000, now we're at 113. They're accumulating a short as they are offloading their longs. So keeping this into consideration, all right, this is vital evidence here in determining what is going to take place. So keeping this into consideration and looking at this, my thoughts yesterday were that they were going to creep price upwards here in an attempt to continue to lure in more shorts. So I'm watching the positions held by retail traders, and I'm watching as price is moving up. And my thoughts were that if we got price up to only halfway before Friday's data release, that they would instigate retail traders to short as the banks would continue to push price upwards. Okay? So if that's the case, if price does not contact this area of supply that I'm watching here, let's do that properly. If price does not get up here before Friday, I'm expecting price to continue heading higher. And what allows price to continue heading higher? Well, what has been the case is that every time retail traders are switching from longs to shorts, price goes higher. This is exactly what took place here. Retail traders switch from longs to shorts, and that caused that rally. So you take that and you look at what's potentially going to happen here. So I believe what's going to lure retail traders into adding to their short positions, well, if they believe the euro was going to drop, which means what? The dollar would have to rally, correct? Okay. So for the dollar to rally, what would be required? I mean, look, let's just take a look at this. Non-farm payrolls, let's click on that, and I'll do a screenshot. So your typical traders coming and looking at this and reading this, okay? A higher than expected figure should be seen as positive, okay? Positive. A higher than expected figure should be seen as positive. So is that not what they would want? A higher than expected number should be positive. They want you to think that the dollar is going to rally so that you could think that the euro is going to drop, so that you could increase your short positions, so that the banks can push that against you. Because what do they want? The banks want to offload their long positions. So where do you think retail traders are going to start going long? Right up here. This is what I believe, because that's what they did here. Exact same thing. So why would it be any different? This has happened over and over again. It's repeatable. They do this over and over again. So what I'm looking at is they need a better than expected number. So non-farm payrolls last week was, or last session was, or last month was 187. And consensus 170. So better than expectation would be anything above 170. So is it going to be above 187? I don't know. I don't know. Do I think a lot of jobs are being created? No, I don't think so. So I think to myself, what does your average person think? Would they expect previous was 187 and now the new number is 215,000? Would they expect that? Or would that seem like a little bit illegitimate? You know, considering the circumstances in the U.S. economy. It's not the greatest. Okay, we see a lot of places closing down, a lot of AI technology being incorporated, a lot of self-scanning systems and all sorts of things where people are not working. So would people expect 200? No. But anything above 170 would still be considered to be positive, even if it's below 187. So I'm thinking to myself, they're probably going to want to make it believable, so they're going to make the number below 187, but they're going to make it above 170 so it can still be considered to be positive. You see how they do this? So this is what I'm seeing here. So I'm long the euro. I will be long. I'm expecting price. I've added to my position on this dip down. And the reason being is when you take a look at the lower time frames, I go down to the 1 hour. One of our students made mention that he located a supply area, an institutional supply area, and I think he was dead on right. Here's an institutional supply area that price dropped from, I should say, and here's an institutional buying area that price is rallying from. So price dropped. I added to my position, to my long position down here, expecting this move like this. I will close my position when price gets to that area, and then I will enter into a short position from here, expecting a move down like this over time. So that's what I'm doing. All right, so I'm laying out to you my thinking. I'm laying out to you what I'm discovering. Okay, this is the Sherlock analysis process. This is one of the aspects of the Sherlock analysis process. It's determining what is the motive here. What is the storyline that's being played out here? Who has the motive to do what? What is taking place and what needs to take place to facilitate what the agenda is. When you know what's taking place and what the agenda is, then you know what's required to help facilitate it, okay? Most traders are sitting at their computer screens thinking, oh, non-farm payrolls, let's wait to see what the number is. If it's above expectations, I'm going to go long the dollar. And I'm going to short the euro, because that's what's supposed to happen, right? Nobody knows the number. We're all sitting there. We're all wondering, oh, it could just be any number. It could be completely random. Who knows? Nobody knows. It's completely random. But that's not the case. That's not the reality of the markets. And I've come to learn this to be true over the many years I've been trading because of just applying the Sherlock analysis process and discovering the truths of the market. You think it's random that price decided to rally up from this area? You think this timing is the way it is? This is demand zone down here. See how price came down to that? Yeah, okay. You see how price dropped from this supply here? These moves aren't random. This is all buying and selling instigated by the banks to make moves on the charts to elicit emotional reactions from retail traders. That's what's going on here, folks. All right. So these are my thoughts. I'm applying the Sherlock analysis process. I'm showing you it live. I'm breaking it down for you, what I'm thinking, why I'm thinking it. I'm collecting the evidence, putting the pieces of the puzzle together. Could I be wrong? Sure, I could be wrong. But I'll tell you that I'm very much more accurate and dead on with the outcomes than not. So, and it's because once you create the logic that needs to be applied, then all you have to do is continue to apply that same logic in the same scenarios. And you'll be shocked to realize that price will usually play out exactly as expected. So this is what I'm watching. This is what I'm doing. And I just wanted to share that with you guys today. Hopefully you could get something out of it. I'll keep it short and sweet. And so that's what I'm doing. Okay, I got my positions open. I'm expecting a rally to continue. And when it gets up there, boy, oh boy, I think it'll be a perfect setup for a drop. Okay, it's just like if you remember, let me go back to the 4-hour chart. It was just like when we were here. Do you remember when we entered into supply? And then the data came out and boom. Okay, you remember that? Okay, to me, this is setting up the same thing. Can it break through this supply and head higher? Yes, I guess it's possible. Anything is possible. But I'm telling you what the odds are. Okay? I'm just telling you what the odds are. Anything can happen, sure. Okay? But the odds are extremely high that what I explained to you is about to happen. Okay, so we'll leave it at that. And join the Telegram channel. If you haven't, you should get in there. You can go to, if you don't know where it is, just type in whiteoakfx.com. That's the school website. Scroll down to the bottom. You'll see the icon. Are you? Right down here. Telegram. Okay? There's the Telegram icon. Click on that. It'll open up our page. Join us. We'll keep you informed of what's going on with the euro as it plays out. And then we'll see what ends up happening. And then we'll discuss it. Okay? And hopefully you guys will get something out of it. All right? Good stuff. Enjoy the rest of your day. Thanks for joining me today. And we'll talk to you soon. Take care, everyone.